preparing for a registrar and transfer agent interview. You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What does a registrar and transfer agent do? A registrar and transfer agent maintains the official investor records for a fund or issuer. In practice, I would handle account creation, subscriptions, redemptions, switches, dividend processing, statement generation, and investor servicing. The RTA ensures unit holder registers are accurate and transactions are processed within agreed timelines. It also supports compliance checks, reporting, and reconciliations, so the asset manager can trust the investor data used for NAV, payments, and regulatory filings. While answering, focus on the RTA's role as the investor record keeper, transaction processor, communication hub, and control layer between investors, fund houses, distributors, depositories, banks, and regulators. Question 2. Walk me through investor onboarding in an RTA environment. Investor onboarding starts with collecting the application, identity documents, address proof, tax declarations, bank details, and nominee or authorized signatory information. I would validate KYC status, screen for AML and sanctions issues, classify FATCA or CRS status, and check whether documents match the investor type. Once exceptions are cleared, the folio is created and bank mandates are linked. Clean onboarding reduces rejected transactions, payment failures, and regulatory risk later. Make sure to cover account opening documentation, KYC and AML validation, tax classification, bank mandate setup, risk categorization, data capture quality, and when the investor folio becomes transaction ready. Question 3. How does the RTA ensure correct unit allotment for a subscription? The key is applying the correct NAV to eligible money. I would first check receipt time, payment realization, scheme, plan, option, and transaction cutoff rules. Then I would apply any entry restrictions, loads, charges, or minimum investment rules before calculating units as net investment amount divided by applicable NAV. After allotment, I would reconcile investor-wise units with bank collections and the fund accounting output. Any mismatch should be parked as an exception, not forced through. In your answer, talk about cutoff timing, receipt of cleared funds, applicable NAV, load or fee treatment, scheme master setup, exception handling, and reconciliation with bank collections. Question 4. How would you process a redemption request? For a redemption, the RTA confirms the request is valid, signed, or digitally authenticated, and within the investor's available units. I would check lock-ins, pledges, stop flags, death cases, or regulatory restrictions before processing. The applicable NAV depends on cutoff rules and scheme terms. Once units are redeemed, proceeds are calculated net of exit load and taxes, then paid to the registered bank account. Finally, the register and statement reflect the reduced holding. Be sure to mention investor authentication, holding validation, lien or lock-in checks, applicable NAV, tax or exit load impact, payment release, and post-transaction statement updates. Question 5. What is the difference between a switch and a redemption followed by a purchase? A switch moves value from one scheme or option to another within the same fund family. Operationally, the source leg is a redemption, and the target leg is a subscription, but they are linked as one investor instruction. I would validate both schemes, cutoff rules, minimum balance, and exit loads. The main control is ensuring the redemption proceeds correctly fund the purchase leg. If one leg fails, the RTA must hold it in exception and communicate clearly. While answering, focus on operational flow, source and target scheme mapping, NAV dates, exit loads, tax treatment, simultaneous processing risk, and how RTAs avoid broken switch legs. Question 6. What KYC and AML red flags should an RTA watch for? KYC and AML controls protect the fund from onboarding prohibited or high-risk investors. I would verify identity, address, ownership structure, authorized signatories, tax residency, and PEP or sanction status. Red flags include unusual investment patterns, third-party payments, frequent in and out transactions, inconsistent source of funds, or investors refusing information. My role is to document facts, stop processing where policy requires, and escalate to compliance. An RTA should never treat AML checks as a box-ticking step. Make sure to cover identity verification, beneficial ownership, politically exposed persons, sanction screening, suspicious transaction indicators, source of funds concerns, periodic refresh, and escalation to compliance, rather than independent judgment. Question 7. Which reconciliations are most important in RTA operations? The most critical reconciliation is between the investor register and the fund accounting records, because investor units must tie to total outstanding units used in NAV. I would also reconcile subscription collections, redemption payouts, dividend payments, rejected payments, and suspense accounts. For DMAT holdings, RTA records should match depository balances. Good reconciliation is not just matching totals. It means investigating aged breaks, identifying root causes, and closing with evidence before sign-off. In your answer, talk about unit reconciliation, bank collection and payout reconciliation, dividend reconciliation, depository or DMAT reconciliation, control accounts, aging items, and daily sign-off discipline. Question 8. How would you handle dividend or distribution processing as an RTA? Dividend processing starts with the declared rate and record date. I would freeze eligible holders as of the record date. Calculate entitlement based on units or shares. Apply withholding tax where required. And validate payout bank details. Failed payments should move to a controlled unpaid dividend account with clear aging. After execution, I would reconcile the total declared distribution to paid amounts, taxes, rejected items, and unpaid balances. Investor statements and confirmations must align. Be sure to mention record date eligibility, unit balances, rate application, tax withholding, bank validation, failed payouts, investor communication, and reconciliation between declared amount and actual payments. Question 9. An investor complains that units are missing from their statement. How would you investigate? I would first authenticate the investor and understand exactly which transaction or period is disputed. Then I would compare the statement against the transaction ledger, application records, payment status, NAV allocation, reversals, switches, and any folio merger. If the investor has bank proof, I would trace whether funds were credited, rejected, or sitting in suspense. I would provide a factual response, correct any RTA error with approval, and keep the complaint tracked to SLA closure. While answering, focus on listening, validating identity, reviewing transaction history, checking rejected or reversed transactions, matching bank proof, verifying folio consolidation, and communicating resolution within SLA. Question 10. What controls would you expect in a high-volume RTA process? In a high-volume RTA operation, controls must prevent both processing errors and fraud. I would expect maker-checker approval for master changes, bank mandate updates, redemptions, and corrections. Systems should validate cutoffs, minimums, duplicate requests, and restricted accounts automatically. Manual overrides need documented reason codes and senior approval. Daily exception reports, reconciliations, audit trails, and aging dashboards are essential. The best control environment catches issues before money or units move. Make sure to cover maker-checker controls, system validations, exception queues, audit trails, segregation of duties, authorization limits, SLA monitoring, reconciliation controls, and prevention of manual override abuse. Question 11. Why are FATCA and CRS important for an RTA? FATCA and CRS require financial institutions to identify investors who may be tax residents in reportable jurisdictions. As an RTA, I would collect self-certifications, capture tax identification numbers, classify entities, and identify controlling persons for certain non-individual investors. Data quality matters because missing or inconsistent tax fields can create reporting errors. I would also monitor changes in circumstances, such as address or residency updates, and escalate incomplete documentation before the fund's regulatory reporting deadline. In your answer, talk about tax residency identification, self-certifications, reportable accounts, controlling persons, data quality, periodic changes in circumstances, and coordination with fund compliance teams. Question 12. How do transfer and transmission requests differ? A transfer is a voluntary movement of units or shares from one holder to another, while transmission happens by operation of law, usually due to death or legal succession. For a transfer, I would verify forms, signatures, consideration rules, and transferee KYC. For transmission, I would check the death certificate, nominee status, probate, succession certificate, or indemnities as required. Because ownership changes are sensitive, documentation and maker-checker review are critical to prevent wrongful transfer. Be sure to distinguish voluntary transfer from legal transmission, and cover documentation, death certificates, probate or succession evidence, signature verification, KYC of transferee, and fraud prevention. Question 13. It is quarter end and transaction volumes spike. How would you manage SLA risk? In a volume spike, I would not simply push faster. I would protect critical cutoffs and cash impacting transactions first. I would segment queues by subscriptions, redemptions, corporate actions, complaints, and exceptions. Then allocate staff based on risk and SLA. Daily dashboards should show pending age, rejection reasons, and bottlenecks. If capacity is tight, I would escalate early, request overtime, or cross-train support, and maintain quality checks so backlog reduction does not create rework. While answering, focus on prioritization by regulatory deadline and cash impact, queue management, capacity planning, escalation, quality sampling, exception reporting, and avoiding speed-driven control failures. Question 14. If an investor was allotted units using the wrong NAV, what would you do? A wrong NAV allotment is a financial error, so I would first stop further related processing and quantify the impact at investor, scheme, and total unit level. Then I would check whether the issue came from cutoff capture, NAV feed, system setup, or manual override. Corrections should be approved under the error policy, with compensation assessed if the investor or fund was disadvantaged. After correction, I would document the root cause and tighten the control. Make sure to cover error identification, impact quantification, approvals, correction entries, investor communication, fund or investor compensation, root cause analysis, and strengthening controls to prevent recurrence. Question 15. What would you check during an RTA system migration or data conversion? During an RTA migration, accuracy of investor records is the priority. I would validate static data, holdings, transaction history, bank mandates, nominee details, tax classifications, and communication preferences. Opening balances in the new system must tie to the old register, fund accounting records, and depository data where relevant. I would support parallel runs, compare sample statements, review exception reports, and sign off only after breaks are explained. A poor migration creates long-term servicing and regulatory problems. In your answer, talk about static data mapping, transaction history, opening balances, unit holder registers, bank mandates, tax fields, exception reports, parallel runs, and post-migration reconciliation. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.